So tomorrow's a big day for Bed Bath & Beyond stock, and February 1st is a huge day for Bed Bath & Beyond as a company. I'm going to start by explaining what's going on with Bed Bath & Beyond as a company, and skip to the middle or next chapter of the video to see what's happening with the Bed Bath & Beyond stock tomorrow. So February 1st is a huge day for Bed Bath & Beyond because its coupons are due. And what do I mean by coupons? The bonds issued to people or investors basically are at $1.2 billion outstanding. And they have to provide interest payments on those coupons at every quarter. So their quarterly payment is coming up, and it's $28 million, and it has to happen on February 1st. If it doesn't happen, that's an automatic bankruptcy. So right now, currently, Bed Bath & Beyond does have enough cash on hand to make that payment, but it's going to struggle with, do they make the payment and, lose that cash on hand, which is super, super valuable right now because they have no inventory, they're losing employees, they're losing stores rapidly, or do they hold on to that cash at the expense of evaluations, bond values, safety ratings, credit ratings, and use it to hopefully keep going as a business and go forward in the future? It's tough to say, but people are going to be upset if they don't make that February 1st payment, which is expected at $28 million. See, Bed Bath & Beyond is in a pretty bad spot. The quarter ending November 26, or pretty much around Q3 area, they lost over $300 million in cash that quarter. That was a lot of money spent, a lot of money gone. So they've burned over $300 million in cash pretty quickly. And, obviously that's not a good sign, but reports say that they have $500 million in cash and credit lines that they can pull from for additional funds. Now, this is not going to help their financial situation, but they need to make a drastic change in order to survive. And that's going to require a lot of cash, which is coming at it's very hard to find right now for them. So what happens if they miss the interest payment of $28 million on February 1st? Well, they have a 30-day grace period where they're allowed to still come up with that money and make the payment before it's going to affect the bond. So if they don't make the payment, then the bond holders and anyone, creditors, they will have legal rights to come up with a lawsuit or try to get their money a legal route because, they are owed the $28 million. So if they don't get it now, they have good grounds to sue. So Bed Bath & Beyond is kind of going back and forth. Do they raise debt or do they just, file for bankruptcy and call it that and cut their losses where they are? Now, what's interesting is the retail, I guess you could call it meme community. What's happened to GameStop and AMC where the stocks just went parabolic has actually happened to Bed Bath & Beyond. And that's they step into companies that are high short interest and they can, jack up the price. And I'm going to go into that, so stay tuned. Right now, in order to stay alive, they plan on making $100 million in cuts. This includes layoffs, buildings, overhead operating expenses. But like I said, the company's stock kind of went crazy. And what was interesting is the same thing happened to AMC. Their stock was at a very low value. Issuing shares didn't make a lot of sense. But once that stock really went up in value and like 20x basically, they were able to offer stock and then, create a bunch of capital that they could use to improve their business. So it would be interesting. Would Bed Bath & Beyond try to do the same thing? Or are they going to take a different approach to it with this new opportunity that may be appearing? They also might try to pull credit lines in order to make this payment, but that's just going to basically push the ball down the road as far as what's happening to the company in bankruptcy. Bed Bath & Beyond still has yet to release the data from their current earnings, but this includes the holidays. So that should be a little bit more generous, or they should be making a little bit more money during the holiday season compared to normal. But it's still unlikely that this is going to pull them out of Chapter 11 bankruptcy. Last Tuesday, the company had reported that the third quarter earnings declined by 1/3 to $1.26 billion, which sounds like a lot, but this loss widened to $393 million compared to the previous $276 million during the same quarter last year. So let's move over to the stock and see what's happening there, because I know that's very popular this week. So currently it's sitting at 250% higher since they announced that they were going to go file for bankruptcy. So why is this? It's basically a short interest, short squeeze opportunity for the investor. So I'm going to briefly explain a short squeeze is as simple as possible. So shorting is when you're borrowing the stock from a broker and you make money when the stock goes down. All you need to know is that a short order is a sell order. Okay, that's important. Short order is a sell order. So what's unique about short selling is that you can actually go upside down on your trade, meaning that you can owe money. So let's say you short a stock at $5 and it goes to $0. Well, you have made $5 per share that you shorted on that. That's awesome. But what about if the opposite happens? You have your short at $5 and it goes to $10. Now you've also gone to zero. If If you had $5,000, you would now have $0. Okay. Well, let's say it goes from $5 to $11. Now you've lost $6 per share on that, but you only started with $5 per share. So now you actually owe the broker another dollar for every single share. And this is what we see with the short squeeze. So the same thing is happening with big investors on a large scale. We've seen that they have hundreds of thousands of shares shorted, and now we have a low volume that's being traded every day. So retail has stepped in and put in a bunch of buy orders, making the price go up. So now the price is artificially high, or just a little bit higher than these funds want it to be, so they have to cover their shorts. And it's important to note, when you cover a short, you are buying back that short from the broker. So that's going to create a bunch of buy orders in the system. And we all know what happens when you have more buy orders than sell orders. That's when the price goes up. So these large firms have two options. They can either double down and add more shorts to the fire, or they can close their shorts, which is going to make the price go up. So either retail investors, or just the normal people, I guess you could call it, by pushing the price up, they're making investors close their shorts out for a loss, which is putting more buy orders in. So retail has pushed it up, and it's gone high enough to where the investors are like, hey, I don't like this. We need to cover our shorts. So they put in their buy orders, but their buy orders are huge. So now they've really pushed the price up. And now, will more people keep covering, and it's going to keep just throwing the price up? Or do you think it's done? And that's kind of the question that investors are asking themselves. And when I say investors, I mean the people of Reddit that are, which there's no problem with. So Justin from Deep Dive Stocks on Twitter, he goes on to this interesting chart. And let's take a peek at it. So another important concept to understand, and I'm not going to try to make you understand it, but when option contracts have to hedge, they have to put in buy orders in order to offset their hedge. They have to be delta neutral, and I'm not going to go into that, but just know what he's trying to say here with this chart is the hedge requirement is 68 million shares have to be bought. So these people that were holding option contracts are now on the hook for 68 million shares being bought, or they need to buy 68 million shares. It's probable that that has already happened for the most part, but it's possible that there's still some shares that still need to be bought. So this could create more buy orders, sending the stock even higher. As far as which direction it's going, it's hard to know because data is a little bit slow coming out of what shorts are still holding and whatnot. If there's a lot of shorts still holding, it is possible that this stock could keep on ripping, but also at the same time, it could drop just as fast. So there's a high amount of risk to this stock. There's a lot of money to be made. I don't know which direction it's on. That is up for you guys to interpret yourself. It's very risky, and I am not a financial advisor, so I will not be saying where I think it's going. But up would be a lot of fun.